Alright everyone, Cowboy Trades here. Welcome back to the channel for a super quick update on JASMY. I just wanted to get a quick update out on a lot of altcoins, including JASMY, as we do have our next FOMC meeting in the next 48 hours. I do personally think, and the markets think, that we're going to get another 25 basis point increase. So here's what this could mean for JASMY. Well, if we're looking at some of the charts we've been talking about on the channel, we've been talking about this SFP pattern where we've been trading within this particular range for 90% of the time. And if we do come over to the daily time frame, what you can see is as soon as we had a move beneath this range, this was a swing failure pattern, huge move to the upside. This was a swing failure pattern above the range, huge move to the downside. Quite recently, we had, coming back into early April, we had a swing failure pattern and a huge move back down. And in the past 48 hours, we've pushed up to this level, made a lower high. So from here, you can see swing failure pattern, lower high, SFP, lower high, SFP, lower high, SFP, lower high. Every time this has happened, we've had a pretty brutal move back down to the downside. But what is interesting about both of these SFP patterns is in the macro time frame, they are exactly the same. So let's clear up these data points. What you can see is coming back, if we come over to the weekly time frame, this is much clearer to see. This was one major SFP pattern, and this is another major SFP pattern. But if we come over to the daily, you can see we can break these two major SFP patterns into 4 different data points. You can see there was this high above the SFP, we broke back down into the range, and then we came back up, tried to push back above this range one more time, came back to back test it as support, major move back down. Over here you can see we broke back up, we broke above the range, we broke back into the range, made a higher low in the lower time frames, pushed back up, tried to flip the range as support, immediately got crushed back down. So these two data points, while on the weekly time frame this is just one big SFP and this is just another big SFP, on the daily time frame these are actually 4 different data points, and these two line up so beautifully. Now what happened over here? We actually formed, if we look at this trend line here, you can see this trend line was in play and we had a flip above it and we made an M pattern and then we nuked to the downside. Over here you can see from this touch point over here, much more beautiful on the weekly time frame, but we made a very clear M pattern, and it looks like we're coming down to the neckline right now. Now in the next few days, I don't think we're going to be down here today or tomorrow, maybe in the next few days after we have that FOMC meeting, this is going to be clocking in round about 0.0057 cents. So if this fractal repeats and we make this M pattern and we break beneath 0.0057, we could absolutely launch back down to the bottom of the range. And here's where things get brutal. If we come back down to the bottom of the range, just like we did in this SFP pattern, portraying a double SFP pattern, what we've got on the daily time frame is 2 beautiful fractals potentially lining up on the weekly time frame to one big M pattern. You can see this big box of support right here. This was support, we bounced on it, we flipped it as resistance, we flipped it as resistance, we broke back above it, flipped it as support, held it as support, held it as support. Right now, since this most recent run up, you can see a very clear M pattern with a neckline. The neckline is a little bit ambiguous because potentially you could draw from this data point and you could draw this data point here. And then if you are talking about, hey, in the next few weeks, if we come down to this, JASMY could be coming down to about 0.0042, or potentially you could just draw this horizontal line of support as we have had touch points here, and if you consider this move beneath it, you could just call this another SFP, swing failure pattern, big move to the upside. Failed move equals a fast move in the opposite direction, always in the market. So between these ranges right here, 0.0044 and 0.004 approximately, really not a big move between these, is where I think JASMY is going to be coming down to in the immediate short term. This is about a 29 to 33% drop that could be happening after we have another 25 basis point increase on our next FOMC decision. Now, if we come over to the weekly time frame, let's see how plausible it is that we could have an absolute meltdown to this neckline. Well, let's look at the weekly stochastic RSI. Right now, if we clear up this chart, stochastic RSI this week has just crossed bearish once again. What happened the last time this happened? Well, you can see a bearish cross right here. Now, we did push up a tiny bit higher, but then once the stochastic on the weekly time frame really started to kick in, we broke down 41%. Now, as we talked about in the previous chart, we're calling for about a 33% move, so it wouldn't be too unlikely considering how we just crossed bearish this week, and we're only down about 6%. If we come down about 33%, this would beautifully line us up with that 44% move. And what was this before? We had a 41% drop. If we have a 41% drop, you could see us dropping all the way down to about that 4 region that we just talked about a moment ago. So stochastic RSI right now, clearing up this chart once again, is absolutely monumentally overextended. On the weekly, there's so much room for us to come down and make new bear market lows. These squeeze momentum indicators ticking into dark green, indicative a new bearish trend is really coming. You can see this rounding top on the squeeze momentum indicator, so lots of room for all of these oscillators to break down for months at a time. We're really preparing for that next macro move right now for JASMY. And also, if we look at the MFI, the money flow index is all the way up at 68, super overextended. When was the last time the MFI was this overextended, and what happened for the markets? Well, you can see if we backtrace this, you can see we had a rally above 68 and we're coming back down to 68 right now. What happened prior to this? This all happened at about a couple of weeks rally or so. You can see a major move up to 5 cents when the MFI was this high, and then you can see we started to break down just like we have over here. So if we're looking at roundabout what happened, this was roundabout this data point here, and we broke down 73%. Bear in mind, I'm looking at when the MFI was roundabout 68. I'm not talking about this, 83% drop from the top up here on the MFI. Although, if you are taking that into consideration, you can see that we actually came up to 75 back here on the MFI, and then over here, we actually pushed up to 76.5. So we're so overextended right now. All of these oscillators could absolutely continue breaking down from this top up here. About an 80% drop would rocket us into new bear market lows down to round about, well, very interestingly, what is it going to be? Is it going to be about an 85% drop? Around about an 85% drop is going to take us down to 0.001. And if we come over to some of our final charts, of course, this Elliott wave theory, I'll discuss this in just one second. If we come over to our final charts, you can see we actually have Fibonacci's 1.236s, 1.236s down here at round about 0.001. This is a major area which we've been discussing on the channel for quite some time. If we also clear up this, we've been talking about the M pattern. Another way to look at this brutal M pattern is to draw a Fibonacci from the swing high down to the swing low. And you can see crystal clear that this is a lower high. We had a brutal breakdown, and while this doesn't look like a picture perfect bear flag in my opinion, I won't be considering this as a bear flag. If we come over to the daily, you can see, you can draw this as a bear flag if you want. It looks extremely ugly, so I won't be calling it a bear flag, but nonetheless, we topped out here, we broke down, we reverted back to the mean, and as you can see, we reverted beautifully into the 786 and the 618 Fibonacci, coming right into the golden ratio for JASMY. Now, on this reversion, if we clear this up one more time, you can see we beautifully reverted into bull market support bands. We beautifully reverted into the EMA ribbons, short-term moving averages, round about these regions here. The first 2 moving averages we beautifully touched. So this is really what I see happening for JASMY. The macro direction's very clear. You can see our wave count is still in play. We are currently witnessing a brutal 1, 2, 3, 4. Coming down to wave 5, we did rally in the past few weeks or so, but this wave or this touch point up here is literally at the exact same level as it was here. So we haven't invalidated any sort of wave count. In fact, you can see the previous wave 2 is all the way up here at 5 cents. Now, really, we shouldn't see JASMY push above this wave 1 up here, round about 1 cent. But considering we're round about 0.0063 right now, I think this Elliott wave count is beautifully playing out. I still think we're in that final wave 5 to the downside. Now, you might zoom out further. Bear in mind, this is just one chart I'm looking at for JASMY. You can draw this Elliott wave count on the monthly time frame if you want. On the weekly, we had a brutal meltdown and an ABC correction. So this is why I'm starting the 5 wave count from right here. Now, that's really all I've got for JASMY in the higher time frame. Like I said, I do think we're coming down to about 0.001. In the lower time frames, keep your eyes on this neckline. It looks like this double fractal is going to be playing out. Just look at the daily and that bearish engulfing candle. I think we're coming all the way down in the immediate short term to the neckline of this M pattern at 0.44 cent and also 0.0042 cents. So for today, my friends, that's all I've got on JASMY. Things are not looking too hot right now. You can also see Bitcoin has reverted back into this major resistance box. This was previous support, and now we've got a pretty nasty candle falling beneath this level. But anyway, I just said that's the end of the video. I did also just wanted to let you know Bitcoin is not looking too good. JASMY's not looking too good. The markets are not looking too good coming into the next FOMC meeting. If you do enjoy my content, my friends, let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. I'll leave it here. Spinny Boy Cowboy Trades. Stay safe, my friends. The next FOMC is looking like it's going to be pretty brutal for these markets. Spinny Boy Cowboy Trades. I'm out. Peace.